Dipan, what do you make of this weakness that we are seeing in the market? HDFC Bank, of course, is the starting point, but across the board, there's a lot of weakness. Does it give you the opportunity to buy into it, or do you think this is just the start of the fall? We were just waiting for a trigger and it is only started.
Good afternoon. Thank you for having me on your show. This is something which I think I had articulated as well, that the earnings season may turn out to be a bit of a disappointment purely because of base effect and very heightened expectations. And I think HDFC Bank has just kind of been the first result, which I think proves this hypothesis that the earnings, although they are pretty much decent, but just the expectations are running high and earnings may be slightly muted on a year-on-year basis because the base effect will catch up. And I think this trend will continue right throughout the earnings season for many of the blue chip companies which have run up significantly. Only exception, of course, is large cap IT, where there were hardly any expectations and even just about beating the expectations of the investors and the analysts led to a rally in stocks. But by and large, it's going to be a tough earnings season, and you can expect this kind of volatility. So I don't think the market will stop at these levels. You can see a deeper correction. So I'm not buying anything at this point of time.
Okay, but how is it that you're protecting capital, Dipan? Would you say that book profits, and this time not just restricted to small and mid caps, but even large caps perhaps?
I think it's a good idea to book some profit at this point of time, especially in slightly not so great fundamental stocks, especially the ones which have run up significantly and are trading at very rich multiples, where the track record or the corporate governance standards are a bit of a suspect. So those should be targeted first. You may not sell out completely, but at least you should trim your positions across the board. And one other important decision is that not to invest any further money at these levels. See, most investors keep getting some amount of incremental cash flows which they want to deploy into equities. I think that they should pause at this point of time. If my sense is my expectation, and I reserve the right to be wrong, is that you will see the market trade much lower from these levels as the earnings season progresses.
Okay, so there's a clear call coming in that there might be further weakness because earnings season might not be as strong as Street was expecting. But as he pointed out, it was IT space which was actually overperforming or performing better versus the muted expectation. Today, of course, the numbers from LTI Mindtree is expected. Let me quickly run you through what the expectation is. The constant currency growth is expected at around 1%. The dollar revenue might stay flat at that $1,080 million in terms of the dollar revenue. Rupee revenue is seen at now 9,030 crore thereabout as far as LTI Mindtree is concerned. Margins might take a bit of a knock by around 30 basis points because there's a poor revenue mix at play. There's pass-through revenue expected this time around. While it does support the top line, on the margin front, it's a bit dilutive and hence we're expecting a slide there. Though the profitability is expected to be flat, the important bit would be to hear the management commentary. Last time they had already rolled back their guidance when they had earlier said that double-digit growth is likely in FY24. They had rolled that back, but Street now is expecting at least a 7 to 9% kind of growth. Can they deliver that is the big question to watch out for. But Shilpa, since IT has been one pack which has been showing a lot of resilience, of course today TCS, Infosys is trending higher. You also have LTI Mindtree going decently strong into its earnings given the market setup. What is your recommendation within the IT pack?
IT, I would prefer OFSS from here. We see a very high volume strike today as well. And stock is trading at around 5100 zones. I believe from here 50 to 50 to 5300 can happen very soon. There's a lot of increase in open interest as well. So this is one stock I'm looking at IT pack right now.
Oracle Finance is the one that you're watching out for. But in the meantime, take a look at Go Fashion. That's seen a bit of a perk up. RVNL, Godrej Industries, these are some of the stocks which are seeing some sort of traction from the bottom of the day. Clearly, the day has belonged to the PSUs as well. Cochin Shipyard, that's higher by 8%. RVNL, as just flagged out, is 7% higher. Mishra Dhatu Nigam is 6% higher. MSTC, Indian Railway Financial Corporation, Hoodco, these are the names which are actually doing well. Nuresh, within the public sector entities, which are the strongest charts where the risk reward is still favorable?
That's a tough question because majority of the names have gone up in a major way. So the only places where there is still strength is the larger PSU names, which is where you get into ONGC, Power Grid, and even a State Bank of India. Because even the smallest names like a ITI or even a MSTC majority of the names have gone up. In the railway space, there is only one stock left, that is RITES. So the RITES could be interesting out of all the names.
And a couple of others. But coming back to a conversation about earnings, Dipan, do you think financials, which was expected to see a bit of a pickup given the underperformance we had seen last year, that case is getting challenged now because for the initial set of numbers that we have seen, there's clearly going to be increased fight for deposits and the credit cost is something which might come under pressure. Do you think this is getting reflected in the stock prices well enough?
I think there is somewhat of extrapolation from HDFC Bank's numbers onto rest of the banks and NBFCs. And yes, certainly there are some minor headwinds as regards net interest margin ratios and marginal increases in NPAs. But I don't think that the longer term bull market or the longer term positive trends in NBFC banks is going to materially change. And also same holds true for a lot of the other earnings in other sectors as well. All I'm trying to say over here is that expect one or two quarters of slightly softer earnings, which on a standalone basis, without considering the stock price performance and the investor expectation, will be decent. But it's just that, for stock prices to move up from these levels, not only do you need companies to beat their earnings expectations significantly, but also for investors to lower the expectations, and that's not happening. So it's just a bit of an expectation mismatch, which will cause a correction in the market, and that correction could easily be 8 to 10% on the broad market indices from these levels or so. It's not that this multi-year bull market is now over or something. It's just that this phase, I think, of the bull market would perhaps end as this earnings season gathers momentum.
But given the fact that long-term bull market is still intact, Dipan, I'm sure at some point of time one needs to keep the buying list ready to deploy, maybe if not today, over the course of next 2-3 weeks, because obviously it's impossible to time the bottom. If you had to keep your shopping list ready, which are the sectors and stocks that you would watch out for?
See, I don't want to answer that question, and I'm going to duck it for the simple reason that we have an earnings season coming up, and a lot of companies will come with good numbers and not so good numbers and disappointments as well. And we're just too close to this earnings season, so I just like to wait and watch. Normally, I advise clients and we ourselves do not do any major investing or trading activity during the earnings season. Like, for example, say a week ago, I told you about HDFC Bank, and mind you, HDFC Bank has been on the buy list of almost every fund manager and analyst. And we had a number like this, then, there was no point making that recommendation at that point of time. So it's better that you see the results, analyze it, see what the management has to say, where is the price to earnings multiple at this point of time, and then maybe make a more informed investment decision. But we all know of the larger investment themes in India, that is the capital goods sector, the consumption-oriented sectors, and to an extent, I think IT also is revving up pretty well. So broadly, these are the three investment themes that we are presently invested in and looking for new ideas over there. It's just that you want to see the results and then take a plunge.
Appreciate that. So those were the broad themes. We're of course very close to the earnings season to give the names. But talking about earnings, IndusInd Bank is expected to come out with its earnings tomorrow. What's the street expecting, Gaurav?
Yeah, so if we talk about IndusInd Bank, let's see what the street is expecting first. If we talk about net interest income, they're penciling in the growth of 16.5% in net interest income on a YoY basis, and it could come somewhere in the range of 5,200 crore levels. If we talk about pre-provisional operating profit, they're penciling in a growth of 8.3% on a YoY basis, because we may see some kind of uptick in the OPEX cost, as well as we may see some kind of decline in the treasury income for the bank in this quarter. If we talk about profitability after tax, it could grow somewhere in the range of 16% on a YoY basis, and it could come somewhere in the range of 2,200 crore levels, because street is expecting provisions to remain at a lower side in this quarter for the bank. Talking about the provisional data, the bank has already given total advances growth of 20% on a YoY basis, and total deposit growth was also strong at 13% on a YoY basis. If we talk about retail deposits, now they stand at 45% of the total deposits, but CASA ratio somewhere was declined by 90 bips on a quarter-on-quarter basis, and now it stands at 13.5%. So from here on, what we can expect from the management is that any commentary on the margin trajectory, because interest rates are rising, and consensus is expecting NIMs to stay stabilized at 4.29%, as what has been there for the bank already. Let's also look at the commentary for the loan growth guidance for FY25. any commentary on the OPEX operating expenses or any number that comes up on the operating expenses will be a crucial thing for the bank to watch out for. And lastly, we should also look out for a commentary which would come for a CASA ratios growth going ahead. Let's also look at the slippage ratio because consensus is expecting this to remain low, and this will help the bank's asset quality to remain strong for the quarter. So these are the key expectations from the consensus from the bank's results coming up tomorrow.
Okay, that's the anticipation from IndusInd Bank. And that's the other thing, right, Dipan? That this fear that you're seeing after HDFC Bank play out amongst the market, it's rubbing off on ICICI Bank and IndusInd also, which are due to report their numbers later this week.
I think it's natural. You see, also there's a lot of trading activity and there's a lot of F&O positions as well in the market at this point of time, and kind of a perceived to be bad number like HDFC is going to have a impact on other peer group companies as well. But it doesn't mean that the results per se of IndusInd or ICICI Bank may be as bad as HDFC Bank, because there are different considerations with HDFC Bank, the merger being the most important one. But I still maintain that the numbers will be decent if you look at them, in the manner what if you remove the expectations from the numbers, they'll be decent, and it will show that these companies are on course. They are following the path. They are more or less within the kind of internal management estimates. It's just that I've never seen the market enter a earnings season with this kind of an expectation that earnings will go up as fabulously as the street is expecting. That may not materialize.
Clearly, expectation gap is something which is actually resulting in those exaggerated stock moves as well. But before I let you go, I wanted to get your word as far as the technical picks are concerned on the BTST name. Shilpa, what's the BTST trade or STBT trade that you would want to recommend?
Definitely go for a BTST right now because markets are at crucial levels again. We might see a bounce tomorrow. So in that case, I believe, safe space pharma. Lupin, I believe, is a, good buy. I had recommended the same in Prabhudas Leeladhar as well. I believe, with the stop loss buy above 1405 from here. And, with a stop loss of 1398, and you could see targets of 1430 coming up. And the other one would be a buy in Gujarat Gas. Gujarat Gas has a strong support at 550 zones. So, on declines towards 554, one can buy with a stop loss of 550 and look for targets of 570 to 580 zones.
Right, okay, Shilpa, great to have you in the show. We'll let you go on that note. Thanks as always for joining in. I don't know whether to focus on names which are just about holding on to the green and IT, namely, along with an SBI Life, Tata Consumer, etc. But a large part of the market is weighing heavy. Reliance as well, lower by about 1%. There's ITC also, which is down. Look at Asian Paints as well. Even though the numbers were beat, both in terms of margins, volume growth and PAT, but after that little bit of an adjustment, the revenues were, of course, a miss. And, the numbers have clearly been good, prima facie. 1.6% lower is where Asian Paints is right now. M&M, SBI, Bajaj Auto, IndusInd Bank, the Adani names, it's all weighing heavy on the indexes as we speak right now. Tata Steel, SAIL, metals as well are especially a weak link in today's trading session. But Naresh, I want to take your BTST ideas, or I don't know whether today it's going to be an STBT list.
So BTST ideas again from the defensive names. First is the Band Power Grid, which is closer to the last 52-week high. Stop loss at 237, target price of 245. Second is the Band Apollo Hospitals, which made a new 52-week high today. Stop loss at 5,900, target price of 6,000.
Okay, those are some BTST ideas coming in from Naresh right now. But Dipan, you've got Reliance as well, due to report its numbers. We've seen the rally that's played out in the last 1 week or so on Reliance. Today, of course, a lot of it is getting undone thanks to the overall market weakness. But what's the expectation from the earnings on Friday?
I think it'll be a decent set of earnings. More or less, I think the numbers will be quite good. But as I said, expectations are running a bit high. You could expect a better quarter as far as Jio is concerned, considering the kind of increases in ARPUs that we have seen and new subscriber additions as well. But a lot of questions will be on the new investments in new energy, which Reliance is making. And of course, every time we do ask this question about unlocking of the value of the subsidiaries, that is Geo, as well as the retail business, how that is being unlocked. Is it going to be an IPO or split in the company? I think that's the most important question that management needs to answer.
Value unlocking has been long awaited there, but LIC, that saw quite a bit of breakout at the start of the trading session, Naresh. We saw it finally go past the issue price, which was there for policyholders as well as the retail shareholders, was trading at record high levels, but suddenly it made a bit of a U-turn from there, given the market mood. But do you see any inherent strength in the chart?
So generally, we do see some bit of a resistance around the previous highs, especially around the IPO day highs. Now, going forward, the stock could consolidate between 840 to 920, then eventually break the 920 mark. So closer to 840, 860 is what you want to buy. But overall structure is positive. This rally from 600 to 900 was on very good volumes. So a buy on dips on LIC of India, I would expect eventually it will go above the IPO highs.
Did I think for a brief bit today, right, Anisha? It already made it to not just the IPO price, but I think the listing price also.
So listing happened at a discount. So as it is, it was past the listing price before it is going to be past the issue price, and it did go past the issue price for policy holders and the retail shareholders because there was a discount there. The actual listed issue price was 949, but most part of the people were either the part of retail or the investor or the policy holder bucket. So for them, there was a bit of a green finally on their holdings. But talking about what else is happening in the market, clearly it's just the public sector entities, which is your, saving ground for now, because a lot of those names are holding up in the green. Other than that, on the losing side, South Indian Bank, Restaurant Brands Asia, these are some of the stocks which are coming under pressure. But if I had to ask you, Naresh, in terms of the banking names and the frontline private banks, if you had to take a bet right now and make use of this dip, which is the stock that you would recommend a buy as?
So in terms of banking, we'll be watching out for ICICI Bank. So what I expect is post the numbers of ICICI Access, maybe we could see some normalization in the markets. Today is an overreaction to HDFC Bank result. So 950, 975 is a good zone to buy ICICI Bank.
950, 970, thereabouts, where the stock is just about shutting down today. That's the anticipation from ICICI Bank. But as a tactical call, Dipan, since you do anticipate that the market is going to get a little bit weaker from here, what's the call on PSUs at large? Ex-banks, of course. Do you need to profit take there?
See, I think that if you're overweight PSUs, then just stay put, right? But if you're underweight PSU stocks and these stocks also will correct in line with the market, then it's a good entry point and to try and get equal weight or slightly overweight on PSU, including PSU banks also. I think look at Bank of Maharashtra numbers. I was personally quite impressed with the numbers in terms of credit growth, net interest income, and even their NPA levels. So more and more we are seeing the PSU banks behavior and numbers and qualitative factors catching up with private sector banks. That is one. Then the large part of the PSUs are the ones engaged in capital goods. Those also will do very well. They have got great earnings visibility, be it in defense, be it in railways, because of bulging order book position. So at corrections, if they correct by 15-20% or so, then they're great entry points. And lastly, of course, are the oil marketing companies. Those I would just kind of, wait and watch. Although if there's a correction there, you could expect a trading rally because the environment is certainly improving for them in terms of lower oil prices. So I think more or less, if a portfolio is underweight PSU, then this correction is a good time to kind of get equal to overweight.
Point taken. So that's the view on PSUs. On that note, we let you go. Dipan, Shilpa, as well as Naresh, thanks so much for making time and speaking with us.